In the cash flow method, there are two methods, is right? We have a direct method, we have a direct method, we have a indirect method. Is it right? We have a indirect method. Direct method is nothing but budget, okay? Similar to that budget. What is the cash? We are going to work out on what? We are going to work out on the indirect method. Is it right? Now, what is the rule of that? Rule says that, is it right? We are dividing. Is it right? The rule says that, is that you have the assets, you have the equity and liabilities. Okay. How it will have impact on the cash? Okay. How it will have impact on the, that's the basic thing. Always you, each and every point, each and every point, each and every item we have to check. Okay, each and every item. In the examination, it will take time to solve these type of questions. Understand what? It takes time, and you have to be very clear about time management. Fine. Now, what happens? Now, if assets increases, what happens to cash? The value of asset, assume the value of asset in 2020 and 2021. 2020 assets is how much? 4,000. 2021 the assets is how much? 7,000. What happens to cash? Cash will increase or cash will decrease?
Increase.
Cash will increase or cash will decrease?
Increase.
When asset is increasing, is it? When the asset is increasing, it means you are purchasing. Got my point? When the assets is increasing, it means when you purchase an asset, the asset value will increase. When the asset value will increase, the cash will what happen? Cash will decrease. You are purchasing an asset, you are purchasing a car. What will happen? Your cash will increase or decrease?
Decrease.
100%. Isn't it? Your cash will decrease. Now, the same case, if asset is decreasing, is it? If asset is decreasing, asset will be how much? Assume asset is 2,500 and the asset becomes how much? 1,900. Asset is decreasing. What will happen? Cash will
increase.
You are selling an asset, then only the cash will increase. Rule says that if any asset increases, cash will decrease. If the asset is decreasing, cash will increase. This is rule number 1. Is it right? This is rule number 1 as such. Fine. Now, in the same case, okay, in the same case, take like this, liabilities. Is it? Liabilities. You take loan. Is it right? If loan increases, what happened to cash? Loan amount is 2020, 2021. Loan is 6,000. Okay. Loan is how much? 6,000. Now loan amount is 8,500. Loan increasing. What happens to cash?
Decrease.
La ilaha illallah. You have taken a loan. You have taken a loan. What happens to your cash balance?
Will increase, but we need to repay the loan again.
Sabar.
Okay.
Sabar. Wait. Okay. Cash when liability or equity or increases, cash. Now I will talk about the loan. Is it right? Loan is decreasing. Is it right? Here what's happening? You are borrowing the loan. Is it right? Here what's happening? You are borrowing the loan. Okay. Here what is happening? You are borrowing. You are taking a new loan. Here what happening? You are repaying. Is it? Now, when you are repaying, take my word. Is it right? Your loan amount is how much? 7,500. Now, loan is how much? Loan is 5,600. What happens? Loan is decreasing. What happens to cash?
Decrease.
Decrease. That's all. Understand? This is rule number 1. Is it right? This is, I will, while doing the questions, I will ask only one, whether it is rule number 1 or rule number 2. Is it? Rule number 2 talks about what? Equity and liabilities. If equity and liabilities increases, what will happen? Cash will increase. If equity and liabilities, is it right? If equity and liabilities are decreasing, what happens? Cash will decrease. Are you clear about this?
Yes.
This is what? This is rule number 2. Is it right? This is rule number 2. Be very clear. Nothing is there. If you understand this, this is the most easiest chapter we are going to do. Is it right? And see, listen, another thing. Stepwise marking. Understand point? See, stepwise marking. Don't think about the final result. Whether final result is right or final result is wrong. Don't worry about that. You do the workings, marks will be given. Our target is 50 marks. Any paper, ACCA. I am not talking about this paper. Any paper, 50 marks. Every paper, stepwise marking. Understand? You are working step 1. When I will write, you can see my way of teaching. I will write step 1, step 2, step 3, step 4. When I am writing step 1, step 2, step 3, step 4, every step will have marks. We are not concerned about what is the final result, what is whether we get that balance sheet tallied or not. That balance sheet tallied, they will give only 1 mark or half mark, that much. That is not important at all. Maximum 1 mark they will give that for the total. Otherwise, they will not give anything on the balance sheet total. Fine. Now, this is what? This is rule 1 and this is rule 2. Now, what is the cash flow statement? Is it right? What is the cash flow? Cash flow statement is divided under 3 categories. Is that? First, think like that. Divide the balance sheet. Is it right? Divide the balance sheet. One side you will have what? Equity. One side you have non-current liabilities. One side you have non-current assets. You have current liability. You have current assets. Is it right? Now, rule is same. Rule is asset increases, cash decreases. Okay? Now, what we are doing in this segment is we are dividing this. Okay? We are dividing the things under 3 different areas. The first one is operating activities. The second one is what? Investing activities. Is it right? The second one is investing activities. The third one is what? Financing activities. When we say operating activities are what? It relates to current assets and current liabilities only. Is that? It relates to current assets and current liabilities only. Nothing more, nothing less. Okay? Next. What is the investing activities? Investing activities relates to only to what? Non-current assets. Whereas financing activities is nothing but they talk about non-current liabilities and they talk about what? Equity. Is it? This is going to be called as operating activities. Is it right? This is operating activities. This is going to be called as investing activities. Is it right? This is called as investing activities and this is called as finance. That's all. we have to very clearly manage this. That's as simple as that. I have taken it from the Kaplan, okay? I have taken the, I saw it, then I said that it is, in the previous cases I used to convert it, then I said that no, I have taken the screenshots and I put it on the same way, okay? Now, what you are going to do, see the thing. I told you in the beginning, when we are doing this, prepare a statement of cash flow for a single entity. For one, we are not talking about the group, is it right? We will talk about the group in strategic business reporting in professional level. But here we are talking about the cash flow statement for a one individual company. What you are using? We are using the indirect method, and we are preparing as per what? Our International Accounting Standard 7. Is that? Compare the usefulness about what is how the cash flow information, about how it will work, how it is related to profit or loss or other comprehensive income. See, is it right? Now, what happens whenever you are talking in terms of profit and loss? Is it right? Profit and loss. In profit and loss account, you have all the expenses. In that expenses, you will have something called as cash expenses. You are talking in terms of non-cash expenses. Salaries is a cash expense. Rent is a cash expense. Cash or bank, both are same here, okay? We are talking about bank or cash, there is no difference, okay? Rent, salaries, traveling, is it? What are the non-cash expenses? Example. Tell me right or wrong fast. Yes or no? Don't waste time. Any idea? Is that what is the is that depreciation? Depreciation is a non-cash expense. Every problem will have this. Every problem will have this. Is it right? Now, to the profits, by default, you have to add depreciation. Because this is the reason. There is a reason, is it right? Why? It is a non-cash expense. In the cash flow statement, we will take only cash expenses. Is that only cash income and cash expenses only. Anything non-cash expenses we will not consider. Is it? We will do that. Always. Is it? See, the moment you add depreciation, you will get half mark. Understand what? If there is an adjustment, they will give 1 mark. Every step you will have a mark. Every step. That's very important. You can score marks easily here. Now we will cover it. Next, what you are talking about? They are talking about you have to interpret the cash flow statement. Is that how? What is the investing activities? See what will happen. People, the companies will have less cash. Is it right? They will borrow cash. They will invest. If they are investing activities, we want to analyze it that how much is they are spending. Is it right? How much they are spending on operating activities, how much they are spending on investing activities, and how much you are spending on what? Financing activity. Whether we have spent on the yearly basis, whether the company has spent on investments, whether the company has borrowed or repaid the loan. Is it right? This is why we are talking about that. We are talking about what? We are talking about the assess the performance. Is it right? Assess the where is it? Assess the performance and financial position. Indicate other information including non-financial information. We are not concerned about that much. Okay, we are just not. It is only 20 marks. Very focused question. Is it right? 20 marks. Very focused question. Is that? And the relevant of entity performance. Fine. This much we will do. Next. See the thing. Now you got an idea about this. Is that? You are talking about the IS 7 statement of cash flows. Is it right? The statement of cash flows. Next, what will happen? We are talking in terms of what? Interpretation of the, we are making an interpretation here, and subsequently we are talking in terms of comparison of cash flow statement with what? Statement of profit and loss account. Is it? We have two methods. We have the direct method, we have the indirect method. Little bit, I have taken the screenshot. That is the reason. Little bit. If you have anything, you can check the ebook. Okay, I have taken it from the ebook only. Is it? We have three things. One is operating activities. What are operating activities? Operating activities talks about only current assets and current liabilities. You have investing activities in terms of what? Non-current asset. You have financing activities in terms of non-current liability and in terms of equity. Definitely, there is a change in cash and cash. Is that what? How we can say we have done the cons are right or wrong? The 1 minute. Is it? The closing, the difference, is it right? The difference between the closing balance, is it right? Closing balance of cash, is it right? And opening balance, is it right? Opening balance should tally. Is it right? The difference between whatever the difference will come, that is the answer. Is that? The difference is the answer. Fine. This much we will do. Okay. Next. What it says, what is the objective of cash flow statement? As simple as that. It ensures all entities provide information about the historical changes in cash. Is it? It talks about what? It talks about the historical changes in cash and cash equivalents. Is it? And as simple as that. What they have said, they are talking about the operating activities, they are talking about investing activities, and they are talking about financing activities. Okay? You have the pro forma, is it right? You have the very, very clear structure, is it right? Very clear structure about how the process should work. You should not mix up we should never ever mix the things. Okay? You have what is the cash and cash equivalents? They are talking about what is short term current assets. Highly liquid investments, is it? It is in short term. What is the highly liquid investments? You have something called as commercial paper. Is it right? You are talking about in terms of what? Short term investments. Is it? Which can be readily convertible into cash as such. Is it right? I will use red one. Is it? Pro forma statement. It is often helpful to think about the cash flows into two parts. Is that? First one is what? They are talking about what? They are talking about the direct method and they are talking about the indirect method. But what is in our syllabus, in the financial reporting syllabus, we are going to take which one? We are taking the indirect method only. Is that? What will happen? We will have the reconciliation about the cash. Fine. Is it okay? They mention here it is. Is it right? They have mentioned that. What they have mentioned, see that thing. First and foremost, we have to start like this. First and foremost, that's what it says. From where we have to start? We have to start from profit before tax. They will give us income statement. Is it right? They give you what? They give you the income statement and they give you the statement of financial position. In the income statement, you have to start with profit before tax, 100%. There is no doubt on that. For that, you will make changes. Finance cost, investment. See the thing. You are talking about the depreciation. Is it right? The moment you are talking about depreciation is what? They are adding the depreciation always. Fine. Investment income. Is it right? Investment income. Always they will do? They will deduct it. Because we are not showing investment income here. Investment income will be shown in investing activities. Fine. Next, you have talking about the finance cost. Is it right? You will add finance cost here and subsequently we will reduce finance cost. Okay. Now, this is the structured format. You have the anything profit and sale of non-current assets, provision increase or decrease. Is it right? Provision for taxation, provision for doubtful debts. Any government grants are there, we will deduct. Okay, because it is not from operations. It is not from the operations. Is that next? Increase or decrease in payments. Is that increase or decrease in accruals? We will do this. Is that? But only thing is we have to follow this format. Apart from that, is it that? See the things we are talking in terms here. If what happens whether if current assets increases, cash will what? Cash will decrease. If current assets are decreasing, cash will increase. In the same way, current liability. Current liability decreases, what will happen? Cash will also decreases. Current liability is increasing. What will happen? Cash will increase. I will tell you one thing. Okay? Example. Payables. Is that payables? You have to tell. Okay? Rule is rule. That's all. 2020, 2021. Payables was for how much? Payables for 3,200. Payables are how much? Payables are increased to how much? 600. What happens to cash? What happens to cash? Current liability is increasing. Liability increases. Cash will increase. Payables are there. Is it right? Payables are there. Payables are 2,800. Payables have become 1,600. What happens to cash?
Decrease.
The cash will decrease. Because you pay, because what happening? You are paying payables, is it right? Your payable account is decreasing. Means definitely you are paying, if unless until you don't pay, the amount will not decrease. If you are buying on credit purchases, is it? You are talking about credit purchases. What will happen? Automatically payables will increase. We are buying on credit. We are not paying cash. Understand what? We are buying on credit. We are not paying cash. That is the reason payables will increase. When you are not paying cash, what will happen? Your cash will also, it's not decreasing, it not remain the same. You are getting the product on the credit, your cash will increase. Okay? Your cash will, when you pay, your cash will decrease. When the payables will decrease, it means what? It means we have paid. Is it right? It means we have paid. When payables are increasing, is it right? When payables are increasing, it means what happens? We are talking in terms of what? We are talking in terms of credit purchases. Fine? Don't this we will do it every other lecture. Okay? Every other. This is where we are talking in terms of I have not allow me. Okay, fine. Okay, fine. 1 minute. Okay, fine. I have not put the format here. Okay, I have not taken the format here. No problem. I'm here. Don't worry. Okay. Now, fine. What it says is that what it says that they gave you like this. Is that they gave you like this. Fine. They gave you like this. They gave you what? They gave you a draft financial statements. Is it? They gave you non-current assets. They gave you current assets. Is it right? They gave you that. They always keep it in mind. Balance sheet they will give for 2 years. Is that? Balance sheet they will always give for how many years? 2 years. We have to compare 2006 and 2007. Whereas income statement they will give only for 1 year. Okay? Income statement they will only give. They have given the balance sheet and they gave you what? They gave you the income statement. Fine. Now, apart from that, they gave you so much information. Is it right? They're talking about profit for the year. They are talking something on tangible, non-current assets. This includes land which was revalued at 170 during the revaluation. See, make it a should. There should be only cash movement. Okay, no cash movement, no adjustments. Fine. This include land is this much. The company motor vehicle haulage was replaced during the year. The fleet originally cost 42 million, return down value 11 million, and the time of its replacement. The gross cost of the replacement 180 million, and trade-in allowance is how much? 14 million. Okay, these things all step by step we will do the calculations. Every calculation will have every point will have a supporting calculation. The company acquired new plant 120 million. There was an arrangement on the same day for the liability. Is it right? They have issued 8% loan notes. Is it right? Dated 2002. The value of by which the loan notes exceeded the liability of the plant received. Is it right? Fine. This is related to your non-current assets. Fine. There is an environmental provision is there. Is it right? During the year, made a bonus issue from the share premium account, one new share for every 10 shares. Is it right? They have paid the dividend of how much? 220 million was paid during the year. Is it right? The full preference dividend was paid during the year. What they are asking us? They are asking us to prepare the cash flow statements. Is it right? They prepare the cash flow statement. Now, is it when they are talking about the preparing the cash flow statement, slowly work with one by one thing. Is it right? Slowly work with one by one thing. Fine. Now, what happens? We have to start. We don't start directly. Okay. We have to start with what? We have to start with profit before tax. Fine. Still we have not done. We will do all the calculations. Then we will say how it has to be proceeded. Fine. We'll do all the calculations, and calculations will take really a good time for us. Is it right? Calculation. Now, first and foremost, you have to make sure that what we have to do, we have to say that follow with 1 minute. Follow with what? Follow with the, is that I will put like this. Is it right? I will put like this. I will start from here only. Okay. Is it right? I will start from here only. Okay. Now, first one, step working one. Okay. Put as working one. Is it right? Working. First thing what we have to do, working one is always follow with the taxation. Is it? Working one follow with the taxation. Now just identify where is the taxes. Is it right? Identify where is the tax. This is what? This is 2006, 2007. Is it right? 2006. See, this is 2006 is the closing balance. Okay? 2006 is the closing balance. Closing balance. Sorry. 1 minute. 1 minute. 2006 is the 2006 December. Is it right? And 2007 December. Is it right? 2006 December will be a opening balance for 2007. Okay. 2006 December is the opening balance for the next year. Okay. And 2007 December will be the closing balance. Always. It will never change. Okay. It will never change. Now, What is the taxation? There are various ways, is it right? I will do in both the ways, wherever you. What are the taxation? How much is the first identified taxation? Is that first identified taxation? Where is the taxation? You have a deferred tax, is it right? What is there? You have a is it right? You have a deferred tax, is it right? You have a deferred tax. How much is the deferred tax? Deferred tax, see the things, is it right? Deferred tax is how much? This much. Is it right? Deferred tax is how much? This much. Next, non-current liabilities, is it right? In the current liabilities you have taxation, is it right? In the current liabilities you have taxation. Fine. Now 176, 185. Okay. Now what we have to do? We have to take a tax. See, always make sure that make a taxation account. Okay. Taxation is asset or liability? Taxation. Now, taxation is a non-current liability. Is it right? What happened? It has a non-current liability. Non-current liability opening balance will be on the credit side. Is that opening balance? Is that opening balance? Is that there are two opening balances? The one opening balance is what? Deferred taxation. Is that one opening balance is how much? Deferred taxation. How much is the deferred taxation? Opening balance of deferred taxation is how much? 30. Is that opening balance of deferred taxation is how much? Tax. You have the taxation also, is it right? In the current liabilities, is it right? This has been given in non-current liabilities. This has been given in the current liabilities. How much is the current liabilities? Opening balance 185. Is it right? How much is there? 185. Is it right? Now, you have the closing balance also. Is it right? You have the closing balance also. Closing balance of deferred tax. How much is the closing balance of deferred tax? Closing balance is how much? 52. Okay? 52. This is where it has been given. It has been given in the NCL. Is it right? Next, you have the taxation also. Is it right? Given in the current liabilities. How much is the taxation in the current liabilities? Taxation is 170. How much is there? 176. Is it right? Yes. Is it right? How much is there? 176. Fine. 176. Is it right? Now. Is it 170? Now you just imagine. Is it right? We have done this. Is it? We have taken this. We have taken this. Okay. We have taken this, and wherever the taxation is there, we have to slowly and steadily work out on those issues. Is it right? Here we have taken the taxation, whichever amount we have taken, we just make it a point. Is it right? Now, you go to the income statement. How much is the taxation in the income statement? Income statement taxation is how much? 177. Is it right? Income statement taxation is how much? 177. Is it right? What is the entry they have written? Income statement, they have paid. Is it right? Income means debit, they have done taxation. Credit, they have done the debit, profit and loss account. Credit, taxation. Is it right? I will write this. Is it? I will write here. Small entry. Is it right? Small. What they have done here, it will have. Is it right? Debit, profit and loss account, and credit what? Credit, taxation. Is it right? Credit, taxation. In the taxation account, is it right? In the taxation account, we have to write what? We have to write profit and loss account. How much is the profit and loss account? 177. Is that how much is the profit and loss account? 177. Fine. Now, if assume we have to take into consideration each and everything that has been given. Okay. This is the taxation given in the income statement, and this is the taxation given in the non-current liabilities. That is the taxation given in the current liabilities. By the way, you have to check the adjustments also. Anything is there in the adjustment of taxation. Is it right? Anything is there. They have nothing is there. First point, second point, third point, nothing is there. Fine. Now, listen. See, you do one, you can understand every other thing. Is right? Now, you have to do total. Which side is more? Which side is more? Fast.
Credit side.
Credit side. How much? First do the which side is more? Credit side. 30 plus 185 plus 170. 177. It comes to how much? 392. 392. Is right? Definitely there is some difference. Is it right? There will be some difference. How much is the difference? 392. Is it right? 392 minus 52 minus 176. How much is the difference? 164. Is it right? This is what it is called. This is called as 1 minute. This is called as tax paid. Working note 1. Is it? This is called as how much? Tax paid. How much we have tax? We have paid tax. We have paid tax of how much? 164. Is it right? We have paid tax of how much? 160. Is it clear?
Yes, it's clear.
Is it? No. Fine. Next. Nothing is there. Understand what? Nothing is there. Just keep it in mind. Is it right? Now, next. What you have to do? Slowly and steadily, one by one. Okay. We have started with the profit and loss account, the taxation. Okay. Now, you take into consideration first one. What is there? You are not talking about intangible assets. We will see intangible assets at a later stage. Is it right? We'll see intangible assets at a later stage. Okay, not right now. It is not having that much impact also. Is it right? Unless until we are going to borrow. The second one is it at working note 2. Same process we will do. Okay, we are doing the same process. Working note 2. What we are talking about? Property, plant and equipment. Fine. Now, is that problem? You put an account. Very simple. Is it right? Everywhere you put an account. Property, plant and equipment is an asset. Is it right? It is an asset. If it is an asset, opening balance will be on which side? Debit side or credit side?
Debit side.
Debit side. Opening balance. They have given opening balance. Is it right? How much they have given opening balance? Property, plant and equipment 1,830. Is it right? They have given opening balance of how much? 1,830. They gave the closing balance also. Is it right? They gave a little bit about closing balance also. Write down first. Okay, nothing will happen. They will give the closing balance also. How much is the closing balance? Closing balance is 2,480. Fine. Next, anything is there, property, plant and equipment. You identify property. See, this is what working note 2. Okay, this is working note 2. Is it right? This is working note 1. Fine. This is working note 1. I will put the things like this. Okay. Now, what is there? Just go to the adjustments. Is it right? Just go to the adjustment. What they say? They said that these include land which was revalued how much? Revalued, giving a surplus of how much? 170. Is it right? 170. When there is a 170, is it right? The value of the asset increases. Is it right? The value of the asset is increasing. Is it right? Whether it will be on debit side or credit side.
Debit side.
Debit side. Revaluation. Revaluation. How much is the revaluation? 170. Is that how much is the revaluation? 170. Write down the point. Okay. Where is that? It is note 1. Okay. You put like that. It will be easy for us. Is it right? This is note 1. This is note 2. This is note 3. And this is note 4. Fine. It will be easy for us. How much is there? You have 170. See, this is where it says working note 2. Okay. Gain on property revaluation. How much is there? 170. Is it right? Now, is that this is what? This is note 1. Is it right? This is what? This is note 1. How much? 170. Is it right? Next. What happens? Just go through it. Is it right? Next. The fleet was originally cost how much? The fleet was originally cost 42 million. Return down value is how much? 11. Is it? At the time of replacement. The gross cost of the fleet of replacement is how much? 180. Is it? The gross cost of fleet replacement is how much? 180. Now, is that 180? How much is there? Is that no? How 180. Trade-in allowance is how much? Trade-in allowance is 14 mil. Trade-in allowance was given for the old vehicles. Means it is what happens. Trade-in allowance was given for the old vehicles. How much? 14 million. The 1 minute. The fleet originally was 42 million. Is it right? The fleet was originally 42 million. Return down value is how much? 11 million at the time of replacement. Is it right? Is it? Return down value is how much? At the time of replacement is nothing but this is the sale value. The gross cost of the fleet of replacement is how much? 180 million. Fine. Gross cost is 180 and trade-in allowance is how much? 14. Is it right? Trade-in allowance is how much? 14. Means you are fine. The company acquired some new plant at the cost of how much? 120 million. Is it right? 120 million. Means what happened? The asset is increasing. If the asset increases, it will be on the debit side. Fine. An arrangement was made on the same day for the liability of the plant to be settled by Jack issuing on par 8% loan. Is it right? There is a non-current liability. Okay, we will come to that. The value by which the loan notes exceeded the liability for the plant was received from Broomway in cash. Is it right? No. How? See, is it First line, the fleet was originally cost 42 million. Return down value is how much? 11 million at the time of replacement. Means they have replaced this. How much they have got it for that? 11 million. Is it right? How much they got it? 11 million. Fine. Now, and they have purchased one asset for how much? 120 million. Fine. They have purchased one asset for 120 million. Fine. Now, slowly and steadily. Fine. Now, what happens? Is it? $42 million. The gross is how much? 180. Is it right? The gross is how much? 180. Fine. Now, see the things. Here, what they have mentioned here? Depreciation. Is it right? What they have mentioned here? Depreciation. Okay? Depreciation will be on the debit side or credit side? In the asset account. Depreciation will be on the debit side or credit side in the asset account? Tell me, I am here to help you. Depreciation is will be on the debit or credit side? Are you there?
It will be in credit side.
100%. Why do you have taken? You is right. It always. That's all. Is it right? Depreciation. See, if asset is decreasing, it will be on credit side. Okay. Depreciation is nothing but it is decreasing. Is it right? Asset is decreasing. It will be on the credit side. How much they have calculated depreciation? Put it here. Don't get confused. Working note 2 is at 366. Okay. How much is there? 366. They have sold the asset. Is it right? They have sold the asset. Sale value. How much they have sold the asset? They have sold the asset for 11 million. Is it right? They have sold the asset how much? They have sold the asset for 11 million. Fine. That's what it says. Is it right? If you see the point number, is it right? Sale value 11 million. And how much they have? They have got how much? Replacement is how much? 180 million. Is it right? The gross cost of the fleet replacement was 180 million, and the trading allowance is how much? 14 million. Is it right? Float 14 million, and was given for the old vehicles. Is it? Trading allowance has been given for what? For the old vehicles. This 14 millions is a receipt for us. Is it right? It is asset is increasing. Is it right? Asset is increasing. If the asset increases, listen carefully. 14 million we got it. Is it right? 14 million we got it for the asset. Is it right? That asset will have, means if asset increasing, it will be on the debit side. Okay? Trade in allowances, because the asset is increasing. How much is trading allowance? 14. Is that how much is the trading allowance? 14. And what they have mentioned here in the point number 2 only, is it right? We are not talking about the replacement was 180 million. The company acquired new plant. How much they have acquired new plant? 120 million. Cash will decrease. That's fine. We are not talking about the thing. In the end, we will come to a conclusion whether we have purchased or we have sold. Is it right? We have purchased or we have sold. The company acquired a new plant with how much? 120. Asset is increasing. Is it right? Asset increases. It will be on the which side? It will be on the debit side. This is the rule. It will never change. Is that asset increases, it will be on the debit side. On the debit side, what we have to do? We have to say it is a new plant. How much is the new plant? New plant is how much? 120,000. Fine. Now, is it? Now, how much is there? You got all the things. Is it right? We are not talking about what we have not taken. Give the reason for that also. Is it right? We have not, the fleet originally cost 42 million. Automatically it will come in depreciation. Okay. And we returned on for 11 million. 11 million is the sale value. Is it right? The gross cost of the fleet of replacement was 180 million. Is it? Trade allowance is how much? 14 million. And they have purchased how much? They have purchased for 120 million. Fine. Now, if you put the things, do the total here. First, identify which side is more, debit side or credit side. $2,000. Here 2,480. Is it right? On the credit side, see 2,480. 11,366. Is it right? How much is there? 2,857. Other side will be the difference. Okay, other side will be the difference. How much is the difference? 2,587. Is it right? 2,857. Is it right? 2,857. What is the difference? 1830 minus 170 minus 14 minus 120. How much the difference? Difference is how much? 723. What happened? We have purchased or we have sold? If it is on the debit side, asset is increasing or decreasing?
Decreasing.
Rule, what it says rule? What it says rule? If asset increases, it will be which side?
Debit side.
Debit side. Now with this difference, which side is the difference? Debit side. If the difference is on the debit side, what's happening? Asset has been increased. Now asset is increasing. It means you have purchased or you have sold?
Purchasing.
Purchasing. If you are purchasing, what will happen to the cash?
Decrease.
Good. I will do one problem. You can understand any problems as such. Is it right? Any problem, and I will give you the complete details like this. Difference is how much? Difference. We will take this when you are preparing cash flow statement. We will take this as a consideration. What happened? This is nothing but you have purchased. Is it right? You have purchased. Are you clear about this?
Yes, it's clear.
Now, what they say? You go to the second point, okay? You go to the second point. They have taken the loan, okay? We will come to that. They have taken every other point we will take. 8% loan we have taken. Is it right? Now, anything else? They have talking about environmental provision. Is it right? Environmental provision is estimated the cost of environmental restoration. They have not given any value here. Is it right? They are talking about the ordinary shares. Is it right? Ordinary share capital made a bonus issue for share premium, 1 share for every 10 shares. Later, Jack has made further issue of shares for cash. A dividend of how much? A dividend of 220 million they have paid. Is it right? A dividend of 220 million. Fine. We will come to that. We'll make it a point. Okay. Next. Is it right? What will happen? Just go through it. Is it right? Fine. One. Next. Fine. We have done this. Is it right? We'll do current assets at a later stage, not now. Okay. Ordinary share capital is how much? Ordinary share capital is 400. Is it right? Ordinary share capital is 400, and the share premium is how much? Share premium is 70. Is it right? Next. Is it right? One just keep. Is it? We have taken the property, plant and equipment, current assets. This where we will take this in where? We will take this in operating activities. Okay. We take this in operating activities. Fine. Ordinary shares, we will do this. Okay. Next. Put it as working 3. Okay. Working 3. Fine. Working 3. It is working 3 is what? Share capital and premium. Okay. Put the T account. Credit and debit. Okay. This much. Is it right? Now, opening balance will be on which side?
Credit side.
Credit side. Okay. Opening balance will be on which side? Credit side. Opening balance. Opening balance of equity. Is it right? Opening balance of equity. How much is there? 400. Okay. Opening balance of equity is how much? 400. Next. Retained earnings will not take here. We have share premium. Is it right? We have opening balance of share premium. Is it right? Share premium. How much opening balance of share premium? 70. Okay. How much is the share premium? 70. Fine. Next. Fine. Next is how much? 70. Good. Next. What is the closing balance? You have the closing balance. Is it right? Closing balance is how much? Closing balance is how much? 500. Is it right? Closing balance of equity is how much? Closing balance of equity is 500. Write down in your notes. Okay. Write down in the notes. Next, share premium. How much is the closing balance? Share premium closing balance is 90. Is it right? How much is the share premium closing balance? 90. Fine? Good. That is there. Anything else? Slowly and steadily you check. Retained earnings will not take. Revaluation surplus. Revaluation surplus is done. Is it right? Revaluation surplus is done. Is it right? In working note 1 we have taken. Is it right? In working note 1 we have taken. Now, is it right? Now go to the, now where is that? Yes. Is it right? Is it? Now just go to that point. Okay. During the year, PLC bonus issue for the share premium account for the new shares new share for every 10 shares held, and a dividend of how much they have paid? 220 million. Is that right? How much is the share value? Share value is how much? Share value is 1 each. Is it right? See the thing. How much is the share value? Share value is how much? Share value is how much? 1. How much is the total value of the share? How many shares are there? 400. Is it right? 400. Now I will write here only. Okay, I will write here only. Bonus issue, bonus shares. Is it right? So for 400 shares, is it right? For 400 shares, 1 minute. I just want to. Yes. For 10 shares, is it right? For 10 shares, is it right? 1 bonus share. For 400 shares, bonus shares are how much? Question mark. 400 divided by 100. 400 divided by 10 into 1. Okay, 400 divided by 10 into 1. It comes to how much? 40. It comes to how much? 40. Are you clear about this?
No, can you repeat again this
See,
one?
how many shares are there? They have $1 share. Is it right? How much is there? 400 shares are there. Is it right? They have, see, what is the equity value of that? Here I have written. Is it right? How much is there? It is $1. Is it right? How much is there? What is the, how many there? There are how many? 400. Is it right? 400,000 or whatever it may be. 400 million. Fine. Now 400. It is 40 million. Okay. 400 million shares. Is it right? It means it is in millions. Don't worry about that. Is it right? In million. Now you have 400 million shares are there. Is it right? What is the rule? They say for 10 shares, they will give how many shares? 1 share. Is it right? If you have 10 shares, you will get how many bonus shares? 1 share. But how many shares are there? 400 million. For 400 million shares, how many shares will give? 400 divided by 10 times 1. Is it right? 400 divided by 10 times 1. Just put this equation. Is it right? How many million shares they will get? They will get a million shares of how much? 40 million shares. Is it okay? Not clear. Tell me yes or no.
Yes, it's clear now.
No. Is it clear? Yes. Is it not clear?
It's clear.
Fine. Okay. Now, what happens is that now you just check. That's what it says. It says that. Is it right? It says that. During the year, Jack made bonus issue from the share premium account. From where we got this money? We got it money from the share premium account. Is it right? If they got money from the share premium account, is it right? Assume. Is it right? We are not making another share premium account. Is it right? We are making only one share premium account. How much is the share premium was there? I'm just putting a example of share premium only. Okay. How much is the share premium you have? Share premium is 70. Opening balance. Is it right? Opening balance. Closing balance of share premium is how much? Closing balance is 90. Fine. Now they are using this share premium. What they mentioned clearly, see 1 minute, during the year Jack made bonus issue from where? From the share premium. It is a liability, is it right? It is a liability. If liability will decrease, is it right? Liability will decrease, it will be on the debit side or credit side? If liability,
debit side.
if liability increases, it will be on the debit side. If liability is decreasing, it will be on the credit side. How much is the liability? They used the, is it right, for bonus issue? How much they have issued bonus issue? They have issued it how much? 40. Okay, this much. I'm just putting this to make you understand. Okay, to make you understand. Or only share. Now we are preparing here share premium account. Is it right? Write down in the share premium account. This is also share premium. Is it right? Issue of bonus shares. Is it right? Used from share premium account. Okay, used from how much? 40. How much? 40. Now that's all, nothing is there. Is it right? Nothing is there. Now do the total. Now do the total. How much is, which side is more? 470, 510. Here how much? 0, 3, 0, 3, 630. Is it right? Now 630. Difference is how much?
120.
120. What happened? Liability increases or decreasing? If liability increases, difference will be where? Difference will be on the credit side. If liability is decreasing, difference will be where? Difference will be on the debit side. I am writing these rules all the time, and these rules will never change. Understand? But never ever change. Means we have what we have done. If that is the case, we have issued the shares. Is it right? Issued the shares. What happened? Issued the shares. Is that how much we have issued the shares? 120. Is that how much we have issued the shares? 120. Are you clear about this?
Yes, it's clear.
Give me time. Okay. Next question we are doing. Then you will have more clarity on that. Is it right? The more we do practice, the more clarity will come. Okay. Now we will take this all the things. Is it right? What is there? You have. Is it right? See now if you take into consideration, see the things. Is it what we have taken? We have taken, I will put this, is it right? We have taken this on working note 3. Is it right? We have taken this on working note 3. Okay, working note 3. We will not take retained earnings. Is it right? We will take loan. Loan we will take at next level. Next. Okay. How much is the loan? Fine. We will finish it off. How much is the opening balance of loan? Opening balance is nothing. Is it right? Opening balance is 0. Closing balance is how much? Closing balance is 200. Is it right? Closing balance is how much? 200. Make it as where is that? Is that? Make it as working note 4. Okay. Make it as working note 4. Is it right? Working note 4. Loan. Okay. Loan. put T, okay, T column. One side debit, one side credit. You don't have opening balance, is it right? You don't have opening balance is 0. Closing balance is how much? Closing balance, it is a liability, is it right? Closing balance is how much? Closing balance is how much? 200. Fine, closing balance is how much? 200. Now, we have missed something here. We have not taken that, is it right? We have not taken that. If you take into consideration, is that the company acquired some new plant, is it right? You see this one, is it right? You see this one. The company acquired some new plant at a cost of how much? 120 million. And they have made a day of liability, is it right? An arrangement was made on the same day as a liability for how much? 8% loan. Is it right? 8% loan. Liability increasing. If liability increases, which side we have to show?
Credit side.
Credit side, exactly. Is it right? Credit side. Is it? Is it right? Where loan. Is it right? Loan. What? Property, plant and equipment. How much we have taken loan? 120. Is it right? 120. Fine. Nothing, anything is there. Just go through it. Okay. All the time you have to take into consideration. Is that here we have taken the loan? Is it right? Here we have taken the loan. Is it right? We have taken the loan, that is over. This is over, and we have taken the adjustments also. Now nothing is there to the loan. Where is the balance is more? Debit side or credit side?
Debit side.
Debit side. What is the difference? 80.
80.
Is it right? Means what happens? You have liability is increasing. Means what? Liability is increasing. It means what? You have borrowed. Okay? You have borrowed. Keep this wherever I am putting like this. Differences is important for us. Okay? We are very much concerned about the difference. In every account, difference is important. Understand what? We are concerned only about the difference. We are not concerned about anything else. Is it right? Now. Fine. We are not concerned about anything else. Okay. Next. What we have done? Now, you see that we have done with 8% loan also. 10% redeemable preference shares. Both are same here. Understand point? See the thing. Both are same. Is it right? This and this. Means there is no change. Is it right? There is no change. Is it right? No change. You have government grants. How much is the government grants? Opening 160 and closing how much? Closing 210. Okay. Next. Fine. We'll take this. This you put it as a working note 5. Okay. Working note 5. Anything is there in government grants? Just check. Is it right? Anything is there in government grants? Check. Anything is there in government grants? Liability is also there. See the things. Is it right? Working note 5. Okay. Working note. There is non-current liability is there. There is a current. We have done this. If you remember, we have done this in the lecture 5. Understand my point? Non-current liability and current liability. Whatever the amount which you are going to be in the next 12 months, it is going to be treated as a current liability, and beyond 12 months, it is treated as a non-current liability. Understand point? We have done that. Now we will take those things and we will just add those things here. Is it right? This is the government grants which we have done in the initial lectures. Now, what we have to do, where we have said government grants, I have written there, no. Working note, is it right? Working note 5. Is it working note 5? What is that? It is the government grants. Is it right? Government grants. Debit and credit. Are you understanding? Tell me yes or no.
Yes.
Non-current liability and current liability. Is it right? Closing balance, non-current liability and current liability. Fine. How much is the non-current liability? Non-current liability is how much? Non-current liability is 160. Okay. Non-current liability is how much? 160. Check again. Non-current liability 160. Current and opening is 160. Closing is how much? 210. Is it right? Closing is how much? 210. Is it right? Current liability. Is it right? Current liability. How much is there? Current liability here it is 40 and here it is 50. Okay. Here it is how much? Here it is 40 and here it is how much? Here it is 50. Got my point? Next. Now, you see the things. Is it right? You see the things. Is it? Here you have profit and loss account. How much? Working 5. Okay. Profit and loss account. Profit and loss account how much? Profit and loss account is 50. Is it right? Profit and loss account is 50. We have, see it, if it is in not in brackets, it is nothing but credit. What they have done? Credit profit and loss account. Debit what they have done? Debit government grants. Is it right? They have done credit what? They have done credit profit and loss account. It means the debit is how much? Debit is the government grants. Okay. Now on the debit side, put profit and loss account. How much? 50. Is that? Put profit and loss accounts. Is it at 50? See, this is working 5. Okay. This is working 5. Any doubt is there? I am giving you complete reference for your understanding. Fine. Now that's all is there. Nothing is there. How much? Which side is more?
Debit side.
How much? 210, 310. Is it right? 310. You don't need calculator also. Fine. You don't need difference. How much is the difference? Difference is 110. Is it right? Difference is 110. Means your liability increasing. Is it right? Your liability will increase. It means you received grant. Is it right? You received grant. Liability increases, cash increases. Liability is decreasing, cash will decrease. Is it right? Liability increases, cash will increase. Is that? Difference is how much? Difference is 110. Okay? Are you clear about this? Next.
Yes.
Is it right? It's only mathematics. As simple. You understand the T accounts. Nothing is there here. Is it right? You understand that. Now, what we have done? We have done. We have done deferred tax. We have done 10% redeemable preference, 8% loan. Is it right? We have done with respect to loan. We have done with respect to grant. Environmental provision. How much is the environmental provision? Environmental provision is 24 and this is working note 6. Okay. This is working note 6. We'll come to that. Anything is the environmental provision, here it is there. How much is there? Working note 6. Is it right? Is it right? Fine. working note 6, environmental provision. Same thing, nothing is there. It's very, very easy. Okay, opening balance. It is a liability, is it right? First put this, very easy. Automatically 90% of the things will solve. Opening balance is how much? Opening balance is 2476. Is it right? Opening balance is 24. Closing balance is 76. Profit and loss account. How much is there? Profit and loss account. Is it right? Profit and loss account. They have done profit and loss account debit. Is it right? They have done debit. If profit and loss account debit means environmental provision will be credit. If profit and loss account credit means the environmental provision will be debit. How much is there? 67. Is it right? How much is there? It is 67. Profit and loss account. How much? 67. Where is the difference? Difference is where? More. Sorry, where is the total is where total is more? Total is more on the credit side. Is it right? 191. Is it right? 91. What is the difference?
15.
15. Is it right? It is nothing but liability decreasing. Is it right? Liability is decreasing. Is it right? Liability decreasing is nothing but you have paid cash. Is it right? Cash will decrease. Okay? Liability decreases, cash will decrease. Now understand my point? You have simple. You have to take opening balance, closing balance, everything. Is it right? And subsequently we have to match. That's all. Okay? We have to match as such. Fine? We have done taxation. We have done. Fine? Now. Is it? We no. See again, just for our understanding, I am telling. Is it right? For our understanding, I am saying we have done this. We have done environmental provision. We have done ordinary shares. We have done full preference dividends was paid. We will do this. Is it right? We will do this in the financing activities. We'll do. Okay, where we'll do this, we are going to do in financing activities. Fine, that's all. We have done. That's where we have to do. We have to be very clear about the adjustments. Now, nothing is there. We have to. What we have to do? We have. See here also. Make it sure. What are the things? We have impairment of intangible assets. Is it right? Impairment of intangible assets. We'll do that. Is it right? How much is the intangibles are there? Intangible assets are how much? Is it right? Intangible assets are how much? Where is that? Yes. Intangible assets are how much? 410. Is it right? Intangible assets are how much? 410. Fine. 1 minute. Here you put it as working note 7. Okay. Working note 7. We will make 410 and 450. Okay. 410 and 450. Is it right? Working note 7. Okay. 410 intangible assets. $410 and $450. Is it right? Debit and credit. How much is the opening balance? It is asset. Is that? 410. Is it right? How much is the asset? Is it? Next. Closing balance is how much? Closing balance is 450. Is it right? Closing balance is how much? 450. Now, what happened to intangible assets? Intangible assets. Impairment. Is it a debit? This is debit. Is it right? If you are showing it in the here, it is debit. Means in intangible assets, where we are going to show, we will show it on the credit side. Okay, we will show it in the credit side as profit and loss account. How much in the profit and loss account? We will say how much? 36. What is the total we are having? We are having the total of 486. Is it right? 486. What is the difference? Difference is how much? 76. Asset increasing. Is it right? Asset increasing means cash will decrease. Nothing but difference. First write difference. Okay. First write difference. Is it right? It is intangible. Intangible asset increases. Cash will decrease. Okay. Intangible assets are increasing. Cash will decrease. Every account, make it a point. Difference is very important. Difference is only important. Okay. It's not the important. It is only important as such. Fine. Now, is that what we have done? We have done. See, now you can make it a point. Is it right? Where is that? Yes. We have done intangible assets, working 7, property plant, working 2, ordinary shares, share premium, revaluation, redeemable shares, no change. Is it right? Government bond, deferred tax, environmental provision. Done. We will do this current assets and current liabilities. Is it right? We are doing. I will write this. Is it right? This is what? It is operating activities. OA. Is it right? Operating activities, bank overdraft, all those things. Is it right? Done. Other costs. We don't want other. We start with what? We start with profit before tax. Is that? We start with what? We start with profit before tax. Got my point? Now, this is the final one. Is it right? Statement of cash flow. Statement of cash flow for the year ended 31st March 2007. Fine. Particulars, amount and amount. First and foremost, is it right? That's all. How many workings we have done? We have done 7 workings. Okay, we have done 7 workings. That's all. Is it right? We have done 7 workings. Every working will have is having difference. Is it right? Every working is having a difference. That difference only we will take. Okay. Every working have the difference. As simple as that. We are concerned about what? We are concerned about the difference only. Is it right? We are concerned about the difference only. Done. Inshallah khair. Nothing is there. Is that? Fine. First, what we have to do? We have to start with profit before tax. Is that right? Profit before tax. How much is the profit before tax? Profit before tax is 536. Okay. Profit before tax is how much? 536. Is it? Profit before tax is how much? 536. Okay. Next. Is it? We have to follow. Here they have given you the format. Is it right? Profit before tax, finance cost, investment income, depreciation, all those things. Is it right? We follow the same thing. Is it? Next. What is the finance cost? What is the finance cost? Finance cost is how much? How much is the finance cost? We have to add finance cost. Is it right? Finance cost is how much? 1 minute. Finance cost is here 12. Is it a loan note interest? Loan note interest. Accrued interest is how much? 4. Is it? Accrued interest is how much? 4. Government grants. Is it right? Finance cost. Profit. Fine. Okay. Just. Okay, fine, no problem. Nothing. We are we're not finding finance cost anywhere. Okay, fine. We'll wait. No, nothing will happen. Now, what is that? Is it right? Next, is it right? We don't adjustments for. Is it right? Adjustments for. Okay. We have depreciation. Is it right? How much is the depreciation? How much we have calculated depreciation? They have given in the income statement. Is it right? They have given in the income statement. How much is the depreciation? 366. Is it right? 366. I will write here for your understanding. Okay? Is it right? Add. Is it right? Add depreciation working to. Is it right? Add depreciation working to. How much? 366. Fine. 366. Next. Next. There is a impairment. Is it right? See, impairment is what? Impairment is a cash expense or non-cash expense? Impairment of intangibles. Is it right? Impairment of intangibles is a non-cash expense. Is it right? Impairment is non-cash. It's not the value is decreasing. That's all. Is it right? Value is decreasing. What is that? Plus impairment. It is a impairment of intangibles. How much impairment of intangibles? 36. Okay. Impairment of intangibles 36. Next. Is it right? See the things. Just slowly, steadily. Now. Is it right? Now. How much is see here it is there. Is it right? Yeah, very important. How much you got? What is the return down value? See the thing. Is it right? At the time of replacement is this much. Is that the fleet originally cost 42 and has been returned down to 11. The gross cost of the asset is how much? The gross cost of the trade when they have traded, how much they got it? 14. Is it right? See, trade in allowance. How much trade in allowance is how much? 14. What is the return down value? Return down value is how much? Return down value is, no, I should not write like this. Okay, 1 minute. I will write here only. Is it right? I will write here only. This is the okay, fine. I will write with another mark. Is it right? Fine. Is it? See what happens? Profit on sale of asset. Is it? Profit on sale of. What is the trade in allowance? Trade in allowance is how much? 14. Return down value is how much? 11. Is it right? You have 4. Is it? This is profit on sale of asset. Is it right? This is nothing but profit on sale of asset. Is it? Profit on sale of us. How much? 1 minute. It is not 3. It is not 4. But it is what? It is for 3. Fine. It is not. It is profit on sale is a non-operating income. Is it right? Non-operating income. It is not operating income. It is non-operating income. Understand what? It is non-operating income. Non-operating income, we have to show it separately. We have to deduct it. Is it right? It is not coming through the operations. Is it right? It is not coming through the operation. If this non-operating income has to be deducted. Again I will say, is it? Why what we are doing in cash flow statement, we are taking it only the operations. What happens during the year? This is one time. Okay? This is one time. First time you are doing, it will take time to understand. Next time we will repeat the same point, you will have more clarity. But the rule says that it is a non-operating income. If it is any non-operating income, we should not show in the operating activities. Subsequently, we'll give treatment for that. At this place we should not show it. Fine. Next, what happens if you take into consideration? Next, one by one you take it. Is it right? If you take into consideration, is it right? If you take into consideration how much. What is the format? Just go to the format. Is it right? See the thing. Profit or loss on sale of non-current assets. Profit and loss on the sale. If there is a profit, you have deducted. Is it right? If it is loss, you have added. Is it right? If it is profit, you have deducted. If it is loss, we got profit how much? We got profit of 14 minus 11. We have deducted. Next, government grants. How much amortization? How much is the government grants? You have to reduce the government grants. Is it right? You have to reduce the government grants. How much is the government grants we have paid? Difference is there. Is it right? Government grants. Which way we have done? Working note number 5. Is it right? How much? 50. Liability is decreasing. Is it right? Liability decreases, cash will decrease. Liability decreasing, cash will decrease. Government grants. Working note, which one? Working note number 5. Is it right? Working note number 5. How much? 50. Is it right? Now, you have environmental provision. Is it right? How much is the environmental provision? How much is the environmental provision we have made? How much environmental provision we have made? 15. Is it right? How much we have made? It is 15. we have done 1 minute. Okay, we have done depreciation, we have done impairment, we have done profit on disposal of asset, we have done government grants, is it right? Environmental provision. Environmental provision is 67. Okay, how much? 67. Profit and loss account. The cash, how much we have paid? 15. Is it right? See the things. Is it how much we have paid cash? 15. How much you have paid cash? 15. Is it right? One. Environmental provision. Is it right? Add non-cash expense. Is it right? Non-cash expense. Profit and loss account. Profit and loss account. How much you have shown? 67. How much we have paid cash? We have paid cash of how much? 15. Is it right? We have paid cash of how much? 15. What is the non-cash expense? Non-cash expense is how much? 52. If it is a non-cash expense, it is like depreciation. Is it right? See the thing. I will explain you. How much is the profit and loss account? In the profit and loss account, we have made a provision of paid how much? We have showed it at expense. Is it right? In a profit and loss account, we have showed it as a expense. How much we have showed it as expense? 67. How much we have paid cash? 15. Still in the we have deducted. Is it right? We have deducted how much? 67. Is it right? In the profit and loss account, we have deducted 67. But how much we have paid? We have paid only 15. Is it right? The balance 52 is how much? It is the non-cash expense. If it is a non-cash expense, this has to be added. Any non-cash expense should be added. Is that any non-cash expense should be added? That is the reason. Understand, again I am repeating. In the profit and loss account, we have shown expense as 67. But actually how much we have paid? 15 in cash. Is that is what we are talking about. This is where we are talking about. We are talking in terms of working note 6. How much we have paid? We have paid only 15. The balance is how much? The balance 52 is a non-cash expense. Fine. Now, okay. Next, come back to the things as such. Is that now take current assets. Is it right? Take current assets. Inventory. See the things. Inventory is how much? Inventory is 763. Inventory increased or decreased? Inventory has increased or inventory has decreased? 763,920. Okay? 763,920. You don't write this in the examination like this. Okay? You don't like this. Is that 720,963? Okay? 720,963. Difference is how much?
243.
243. Check again. 720 minus 963. Okay. 1 minute. I agree with you. 1 minute. Hmm. $243. Okay. Now, asset is increasing or decreasing? Asset is increasing or decreasing? Asset is increasing. Is it right? What will happen? Cash will
decrease.
243. Fine. Next. Receivables 472 642. Is it right? 472 642. How much? 170. Okay. Okay. Receivables. $472 minus 646. 472 minus 472 minus 642. Is it right? 472 minus 642. Is it right? It has been increased. Is it right? Cash will, what will happen? Cash will decrease. How much it will decrease? It will decrease by how much? 170. Okay, it will decrease by how much? 170. Okay, fine. And this is what we have done. We have done inventory. We have done receive. We will not take cash. Okay, we will not take cash as such. Fine. Next. Next, payables are there. Is it right? Payables are, trade payables are there. How much is the trade payables? Trade payables are how much? Trade payables are 518 680. Is it right? Trade payables are how much? 518 minus 680. It comes to how much? It comes to, what happens? Payables have increased or decreased? Payables increased. Cash will increase. Is it right? Payables increase. Cash will increase. Payables. Payables. Is it right? How much is the payables? Payables are how much? Payables are how much? 518 680. 518 640. If payable liability increases, what will happen? Cash will increase. How much? 162. Is it right? How much? 162. Okay. $162. Fine.
122, not 162.
No, sorry. It is 680. See the things. See here. How much is their payables? Payables are how much? 680. Okay. Is it clear?
Yes, it's clear.
Now, fine. Okay. Done. How much is the total you will get? Slowly you will do the total. Okay. How much total we will have? How much total we will have? 536, 366, 36 minus 3 minus 50 plus 52 minus 243 minus 170
686.
plus how much?
686.
686. We are not getting, we have somewhere 686. Fine, no problem. Minus 819, 133. There's some difference is coming for us. Okay, fine. Cash generated from operations. Okay, cash generated from operations. Now fine. Now how much here? See what is the format? Follow the format. Is it right? Where is the format? It is it right? Cash generated from operations. How much cash generated from operations? This much. After that, is it right? I will upload that one. Okay, I will upload that one for you. Okay. Next, less interest paid. Is it right? Less interest paid. How much is the interest we have? How much is the interest we have? Interest is have how much? Interest is how much? Is it right? How much is the interest? 1 minute. Finance cost is how much? 12. Is it right? Finance cost is 12. Accrued interest is how much? 4. Is it right? Accrued interest is how much? 4. Is it right? Accrued interest, this is the accrued interest and this is the finance cost. Is it right? Is it right? How much is that? 12. Is it right? How much? 12 means liability. Is it right? I will put like this. I will put for your understanding. Is it right? See the things. Is it? Liability was how much? It is 4. Is it right? Accrued interest is how much? It is 12. Is it right? This is profit and loss account. Is it? Profit and loss account debit. Profit and loss account, what they have done? Profit and loss account, what they have done? In profit and loss account, credit. Is it right? Minus means profit and loss account, debit. Finance cost, loan interest is how much? 12. And one, the accrued interest is how much? 4. Accrued interest is 4. Profit and loss account is how much? 12. This is current liabilities. Current liabilities are how much? 4. Is it right? Current liabilities is how much? 4. Is it right? Now, see, they have a provision of how much? They have a provision of how much? They have provision of 4. Is it right? And how much they have shown in the profit and loss account? They are shown in the profit and loss account of 12. Means, what is the difference? Difference is 8. It is nothing but this is cash paid. Is it right? This is cash paid. Put like this, it will be much easier. Is it right? It is much easier. Is it? It is much easier. I'm writing here, okay? I will write here very clearly. 1 minute. This is how much? Provision is how much? Provision is how much? Provision is 4, okay? Profit and loss account is how much? Profit and loss account as an expense. Is it right? As an expense, how much? We have shown is 12. The net difference, is it right? The net difference is nothing but interest paid. Is right? The net difference It is nothing but interest paid. How much? 8. Is that how much we have paid? It means here how much you have to show? 8. Fine. Net difference. Understand? Provision we have made. See, provision we have made 4. How much we have paid? 18. 14. Sorry, 12 we have paid. Expenses we have paid 12. Provision we have already done how much? 4. The net difference is nothing but we have paid cash. Next, once we have paid, then next you are talking in terms of what? Taxation. Is that we have calculated taxation somewhere. Where we have calculated taxation, I think first thing we have done that. Is it how much you have paid taxation? 164. Is it at working note 1? Difference is how much? 164. Is it taxation? Is it working note 1? Is it right? How much? 164. How much you will get? 686. 686 minus 8 minus 164. How much? 514. This is nothing but cash generated from operating activities. Every step will have mark. Understand point? Every step, every value is having a mark. Is that every value, every amount which is having a mark, it will be marked. Stepwise marking. Understand my point? Stepwise marking. Now, next, what we have, we'll complete this. Okay, we'll complete. I'll take maximum 5 minutes. Maximum. Is it right? Next, what happens? You are talking in terms of what? You are talking about investing activities. Is that you are talking about investing activities? In investing activities, we have done property, plant and equipment. How much we have done property, plant and equipment? Point number 2, 723. Is it right? How much we have purchased? 723. Point working note 2. Okay, working note 2. Is it right? Purchase of property, plant and equipment. Working note 2. Is it right? How much is there? 723. We have purchased. Is it right? We have purchased. Asset increases, cash will decrease. Fine. There is a government grant. Is it right? That is a government grant. How much is the government grant? Government grant is how much? Difference. Received grant. Cash will increase. Is it right? Difference is received grant. 110. Is it right? Difference is what? Received grant. Government grant. Government grant. Is it right? Government. This is working note 3. Is it right? How much? 110. Is it right? Next. You have intangibles also. Is it right? Intangible assets. Is it right? Intangible assets. Working note 7. Is it right? Working note 7. How much is the working note 7? 76. Is it right? Purchased. Is that? Purchase means what happened? Cash will decrease. Is that? Purchase means what will happen? Cash will decrease. Fine. See, this you put it as a A. Is it right? This you put it as a B. Only this much. Only, understand? Only this much. How much is there? 723. 723 minus 723 plus minus 723 plus 110 minus 76. How much is there? 689. It is minus. Is it right? It is minus. Cash outflow from investing activities. Is it right? This is B. Is it right? This is B. Fine. That's all. Next. What we have to do? The next one. Next one. Cash. We have to financing activities. Is it right? Financing activities. We have paid dividends. Is it right? We have paid dividends. Is it equity dividends? How much we have paid equity dividends? 220. Is it right? How much we have paid equity dividends? 220. You see the where it is there? It is there in point number 3. Okay? It is there in point number 3. How much is it? Point number 3, 220. Is it? Point number 3. Point number 3. Okay. How much we have paid? 220. Next, we have paid preference dividends also. Is it right? How much we have paid different dividends? We have. This is in the income statement. Is it right? This is in the profit and loss account. How much we have paid the things in the profit and loss account? It is the preference dividends. How much we have paid? It is right. This is where they are talking in terms of what? Financing activities. How much you have paid? 35. Is that how much you have paid? 35 minus. Is it how much you have paid? 35. Fine. Next, equity shares. How much is there? We have done equity shares and premium also. Is it right? Where we have done in working note 3. Is that we have issued equity shares. How much? What is the difference? We got it 120. Is it right? 120. Is it 120? Issue of equity shares. Equity shares. What is the working note 3? Is it right? Working note 3. No, working note which one? Equity shares is what? Equity shares is working. Then government grant is 5. So okay, government grant is 5. Fine. Yes, government grant is 5. This is not 3. Okay, this is 5. Is it? How much we have issued? We have issued how much? Equity shares. Equity shares is 120. Is it right? Next, we have loan also. Something is there. We have loan. Something we have taken loan. Is it right? Loan. Is it right? Loan is how much? 80. Liability increases, cash will increase. Okay. Liability is increasing, cash will increase. Okay. Cash will increase. Is it right? Issue of loan borrowed. Is it right? Loan borrowed. Which working? Allah Kareem. Working 4. Okay. Which working? Working 4. How much we have loan borrowed? We have loan borrowed is how much? 80. That's all. How much is there? Just do the total. 220 minus 220 minus 220 minus 35 plus 120 plus 80. It comes to how much? It comes to minus 55. Is it right? Cash outflow from financing activities. Point number C. We have some difference. I don't know where it is coming. No problem. Is it right? Are you clear about this? Till now, it's okay for you?
Yes, it's okay.
Is it right? Now. Is it right? Now. Now. Increase or decrease in cash and cash equivalents. Is it right? In cash and cash equivalents. A plus B plus C. Okay? A plus B plus C. How much is A? 514. Is it right? A is how much? 514. 514 plus, 514 minus, is it right? 514 minus 689 minus 55. How much you will get?
Two
230. Is it right? 230. We are not getting right answer. Okay, fine, no problem. Okay? It's not. Okay? Next. 230. Fine? Okay? Add opening balance of cash. Okay, add opening balance of cash. How much is the cash opening balance? Cash opening balance is how much? You have 34. Is it right? Cash opening balance is how much? 34. Understand what? Here it is there. Is it right? Cash opening balance is how much? Cash opening balance is how much? 34. Is it right? Cash opening balance is how much? Cash opening balance is 34. Add. Is it right? 34. What is the difference? 230 minus 230 plus 34. It comes to how much? 996. This has to be a closing balance of cash. Is it right? See the things. Is it? Somewhere, see. Is it? See, this is right. Is it right? This is right what we have done. This is also right what we have done. Is it right? 100, this is right what we have done. Is it right? Only thing is, this is also right. Everything is right. Is it right? We have done all the things right. Okay? We have done 162, this. Everything is right. Only thing is, see, I don't understand. What happened? There is a 366, 36, 3, 50, 52, 52. Here, see, here there is a issue as such. Is it right? Here it is an issue. See, we have done right. Is it right? Here how much they are showing. Is it right? I didn't understand how it happens. Is it right? Here how much they are showing. Here how much it is there? It is 157. It is a question mark. Inventory 720, 963. Is it right? That is the reason I stopped there. You told me that it is 243. Is it right? Inventory. See, inventory we have taken 763, 920. Khalas. Now we have not seen any adjustment for inventory also. Is it right? Have you seen any adjustment for inventory? Have you seen? See, I am just putting the things. See, is it right? This include land is there. Is it right? Other comprehensive income, gain on property of land. Is it right? Gain, and there is a replacement, gross inventory. No way they have shown any inventory. Okay, nowhere they have shown any inventory. And finance cost also, it has been as a 47. Is it right? Finance cost is 47. I didn't get from where they got 47. Fine. Now, listen carefully. Nothing is happened. Inshallah khair. Is it? Now you understand what is the procedure, how we have done?
Yes.
See, now I will take 1 minute to revise it. We have to work it out with what? Work it out with the accounts. We have to take the differences. Once we are very much concerned about the differences only. Okay? And one by one, we have to make it sure that you have to write the adjustment of the adjustments. We will get cash generated from operations. Then we have to take interest and taxation. Is it right? Then we have to take investment activities. That is the reason we have everywhere what we have done. We have made it a point that we have written that working notes. Is it right? Now you understand the importance of working notes as such. Is it right? Where we have taken the working notes. Is it right? We have shown the working note, differences only we have taken, and subsequently what we have done, what is the cash flow from operating activities, investing activities, and financing activities. I will trace it out. Is it right? Again I trace it out. If there is fine, fine. If it is not fine, we cannot add any values without information. Okay? Apart from that, just revise this. When we are coming on Thursday. On Thursday, I will do the section A and B. Friday morning, I will do another problem for this. Is it right? We do another problem with we can do 2 problems on cash flow statements. Fine. Once we have done cash flow statements, almost we have completed 80% of our syllabus. Is it right? Now you can understand. We will talk about taxation. We are talking about property, plant and equipment. All the things. Chapter 3, 4, 5, 6, 7, 8. Whatever we have done in the previous chapters. The moment we say cash flow statement and group accounts, we will take all those concepts and we will incorporate those concepts as such. Okay. I will just send this file right now and yesterday file also and revise it. If anything is there on your case, just